Welcome all, and thank you to NCIA, CannaVest, and the sponsors that have made this virtual event possible. Our panel today is a unique set of experts, those who understand the complicated labyrinth of the US banking and payment systems and how this impacts the cannabis industry. I'm not going to go through and introduce them. It would take half of the session, but please do check them out on the website, look at LinkedIn. Really unique set of skills here and depth of professional expertise in this space. We're going to be hosting this in a talk show style, teeing up questions to each and others weighing in after the first has spoken. What we're going to talk about today is making it easy for your customers to buy from you in person or online. We know it's critical to any retail business and even more so now with the pandemic. However, given the federal status of cannabis as a Schedule I, many conventional banking and payments avenues are not open to cannabis businesses. So today, our experts will discuss what is real and what is fiction in payments, how this affects profitability, how payments can be fuel for federal legalization of cannabis, and maybe a tack on using payments towards tax reform. So thank you to our panelists. We're going to start walking through some of the questions. If there are things you want to talk to the panelists about later, reach us through LinkedIn, reach us through email. This topic, we could spend a day on it. It's exciting, it's complex, and we would love to get a chance to speak with you on it. So let's start with the challenges currently in the US world of banking and payments. And Dan, if we start with you, why is it hard for financial services, the industry, to offer traditional banking and payments products to the cannabis industry? And if you could put on two hats, one is as a CEO supporting the industry and the other one is as a lawyer.
Sure. Thank you, Kirsten. Good to be here. Thank you for putting this together. Good to see you, and Ashley and Tyler, good to see you both as well. I'm glad, Kirsten, you asked me to put on two hats for that question because I've got at least two answers. There is the legal answer and the practical answer. And the legal answer you nailed. Cannabis is a Schedule I controlled substance. That means it has no acceptable legal purpose under the federal laws of the United States, and therefore, for a variety of reasons, it is also improper and generally considered unlawful for a financial institution to take deposit of the proceeds of that Schedule I unlawful drug or the trade therefrom. However, as a practical matter, we all know, as evidenced by the fact that we are all here at this CannaVest virtual event, that many people are making the risk-weighted decision to ignore the fact that cannabis is a federally unlawful drug and are making the decision to engage in the trade of that drug anyway. And likewise, there are at least a handful of financial institutions that over the last several years have made a risk-weighted decision to begin serving the cannabis industry, but it is difficult, it is extremely costly, and for these practical reasons, very few financial institutions are in fact serving the space today.
Thank you. Ashley, can you weigh in as well? Again, as a top lawyer in this space, but also someone who's actively a pioneer in serving it.
Yes, so actually, I would take a slightly different view of that. There's the federal illegality, and then we also have the state lawfulness. So anything that is federally illegal does not necessarily have to be state illegal, and that's kind of where you end up with this strange duality with respect to how we support the cannabis space. You can actually do so lawfully as a financial institution, and with about 15 years of experience operating financial institutions and working on the legal side to design those policies, that's kind of where you understand that it becomes extremely complicated and extremely costly, as Dan said, but it's absolutely doable. The problem is that at this time in the financial space, there's very little bandwidth to design programs like this. And so you have specialty providers like ArteryPay, like Abaca, like Hyper, who come in and create these encapsulated programs that make it much easier to be able to work with the cannabis space, makes it much more cost efficient, more cost effective, and actually allows the financial space to do so in a legal fashion. So, for example, avoiding crossing state lines with the capital, for example, making sure that all of the required reporting is done to the federal government that has set out certain guidelines as to how you're allowed to operate if you are going to take the risk decision that for your financial institution, this is a space that you want to play in. But it's one that you need to be extremely careful because it's very, very easy to do wrong and very difficult to do right. There's not a lot of ways to do it right, and there's a lot of ways to do it wrong.
Ashley, thank you for that. And I'll share, Tyler, I'm going to hand it to you in just a minute. But one of the things we hear a lot of is banks saying, I do want to make this risk weighted decision, but there is no way that my compliance team is ready for this. And I can't afford, nor can I find the folks that could give that level of compliance so that we can get comfortable. But we're good. Our board is good. We've got customers. Help us get in. Tyler, what are you seeing in the industry?
Yeah, I think it goes back to, and I try to explain this to people. The only conversation that matters in this equation is the conversation between the regulators and the financial institutions. And what people don't realize is regulators have had zero guidance. So if you go back to 2014, when the first institutions entered the Colorado market in a state legal environment, regulators were having to learn along with financial institutions. So I'll never forget, I was there for one of the first ever, if not the first ever, examination of an institution in this space. We were fortunate to take the regulators to lunch, and the question was posed to them: do you have any guidance on how to examine an institution that's banking this industry? And the answer was no. So naturally, the next question was, how do you examine an institution when you have no FFIEC handbook and no guidance? And the answer was, we're just winging it. And literally that was their stance. And so this has been a really interesting dynamic where regulatory bodies and financial institutions have had to learn together, and that's created some of the conundrum. And to take it a step further, this is still a highly regulated industry as well. So if you look at other highly regulated industries that are perfectly legal, take out the federal illegality, they have banking issues just like cannabis, and some of those industries dwarf cannabis from a volume perspective. So this is, to everyone else's point, a very complicated issue. I will say that regulators have come a long way. If you would ask me, 6.5 years ago, regulatory bodies were difficult and they were different even by region. So what the OCC said in one region could have been different than their stance in another region, which just added to the complexity. Now we're seeing some standardization, and we're seeing special groups within that regulatory body that specialize in these special case type institutions, which helps everybody. So we've come a long way. It's gotten a lot easier, but it's by no means perfect.
Well, and to your point, with any highly regulated industry, it's going to take specialized examination and special rules and things that everybody can agree to, making it easier for the examiners, but also for the banks being examined. But what is it that you're going to expect of us? So it's, I love that story of how it's evolving.
And I think to that point, Kirsten, I think one of the things that I think maybe speaks louder than anything else to date for any institution trying to get into this space, there has not been an institution shut down for banking the cannabis industry in now almost 7 years. And some of these institutions have well over 1,000 tier one directly plant touching accounts. And so that fact alone is what I think helps people get over the hump from a financial institution perspective.
That is a huge point for everybody to remember. Uh, so the next question is, what's the big deal if a cannabis merchant does use a payment product that doesn't follow the banking rules? Dan, why don't we start with you? What might happen? Do they lose access to merchant account? What are the consequences for the business or their customers?
Well, I think again, I want to answer this from both the practical perspective and the attorney perspective. The practical consequences are perhaps more immediate. If somebody is using a payment method in this industry that's non-compliant, and we see it all the time, especially in very active adult use markets, well, they run the risk of shutdown, of interruption to their business, and of possibly ending up on a terminated merchant blacklist. But if I could, again, as you said, put my attorney hat on here for a minute, I will also suggest that if the operator of a business is misrepresenting the nature of their business in order to induce a financial institution to provide a service, I see Ashley nodding over there, and any lawyers tuned in right now are probably thinking the same thing. Those are the elements of fraud. And so, the potential consequences of defrauding a financial institution to obtain a service are in fact quite significant.
Ashley,
Yes.
you want to weigh in?
Yeah, I want to add a little bit something there. It's not just fraud, it's also money laundering. It's also money laundering, guys. So this is one of those things that's very challenging. Both fraud and money laundering are the kinds of things, especially if you're doing them in an institutional level, like basically meaning that your organization does it repeatedly. It's the kind of thing that you can actually be criminally prosecuted for under federal law. RICO was designed actually for going after criminal organizations. It's what we use to take down the mafia. It's the racketeering statutes at the federal level, and violating bank law in that way, misrepresenting yourself to financial institutions, no matter where they are. And the banks are really the relevant parties, and the card networks are the relevant parties here that you're misrepresenting yourself to. Misrepresenting yourself to those parties is an indicator of money laundering. It causes the Department of Justice and the FBI to be following you. They're going to be looking at this and saying that you and making no distinction between your legal cannabis business and what they see as cartel behavior. So it's very important to be very careful not to engage actually with anything that would be a misrepresentation of what you're doing, both from a financial perspective, even as a financial operator in the space, as a financial institution, you want to make sure that you're not getting into trouble with that either, because it's very, very easy to make these cases. And then you have the transaction records and the proof of it. So basically, as soon as you have a subpoena for those records, you're caught there. And there's very little argument that you can actually make, regardless of the, oh, well, everything's federally illegal, so are we just tacking extra things on? No, a state legal industry versus something that is never federally excusable, things that are important to the security and defense of our country, to the stability of our economy, to the safety and security of our neighborhoods. That is not something where they're going to give you a free pass because you were legally operating your cannabis business and got bad advice from a financial provider or just thought that nobody was paying attention. That's not true. They are watching you.
So to lighten it up a bit,
Sorry.
no, but it's true, and that's where people have asked when we used to get to go to conferences,
Don't
right?
mess around in finance.
And we talked to people. That was one of their big questions.
No work, no games.
But Tyler, if someone in the cannabis industry needs help finding a payments platform or a bank, they want to be entirely transparent, exactly what Dan and Ashley were talking about. What do they do?
On the banking side, to Dan's point earlier, there are very few institutions that are really doing this. So, people see the FinCEN reports and they think, oh, there's, 700 institutions banking this. That's not the case. Every state's different. And I say this, it's going to sound selfish. It's not meant to be that way. For 6.5 or 7 years, whatever it's been thus far, we've always paired operators with a financial institution that will bank them, and we do that free. It's something that we do to help people avoid bad situations, especially third parties that, are representing that they're going to bank funds for an operator. That's something that always scares the heck out of us, and we've seen the fallout as a result. So there are resources in the industry. They can call us. They can get a hold of NCIA, the Banking and Financial Services Committee. We try and do that for the industry as well. So there are resources. But one thing I tell people, never bank with a third party. If you can't walk into an institution, meet with that bank or credit union and deal with them directly, that's a little bit of a red flag.
I agree.
Absolutely.
Transparency is key. Transparency is very key. That's key for all of the financial providers in this space too. Anybody who's providing, like a lot of us on the stage here are providing digital wallets as a mechanism for like legal electronic payments, like non-card based payments. And one of the things that's key to that as well is the fact that, our financial institution providers, they should also be transparent about their activity in this space, supporting our stuff. So one of the things for a way to check on your payments providers too is if they can introduce you to their bank, even just as a reference point, not necessarily mean banking, but if they can do that at minimum as a reference point to the fact that like you operate in the cannabis space and they're aware of that, that's really critically important.
Yeah, transparency is key. And I will disagree with the notion that it's necessary to be able to set foot in a physical branch, because I think as COVID-19 and all of the related economic consequences after that have shown, there is a huge need for banking services to be able to be provided digitally. However, if you can't identify the chartered financial institution that you're working with and where it runs with, I think everybody on this panel will agree that's a significant problem.
I think that's what Tyler meant. I think you're both right. It's not really about the physical format; it's about the charter.
Right. Yeah, it's about look, and it goes back to on the payment side of the fence here. This is a banking problem, not a payments problem. If the banking side can't be solved from a regulatory compliance standpoint, the payment mechanism, no matter what it is, will never survive. And so, again, you've got to know that the financial institution you're dealing with, whether it be on the banking or payment side of the fence, is doing this transparently. They have the regulatory compliance program built out to do this properly. Otherwise, again, it's never going to survive. And it's the reason why, I've probably seen 150 different payment products come out, solve the problem. They launch, they get some traction, they get shut down because that's not the problem. And what they've done was fatally flawed from the beginning. So again, I think it goes along with everybody's point here.
Well, and that kind of leads us into the next topic, which is likely to be a lively discussion, political hotbed topics. So when we are together at conferences and you can walk down the hallways and visit with people, so often somebody will come up and say, oh, I got this new payments thing, and I can take Visa, MasterCard, Amex, and Discover just like I can at a coffee shop. It's really great. And you kind of want to take them aside, right? Like, no, that's not the way it works. But what's some of the challenges in that are the federal legislation. So the two pieces, the Safe Banking Act, the MORE Act, what could either mean to cannabis payments, to banking? Dan, maybe we start with you. With the Safe Banking Act, if it passes, does it enable the major credit card brands to embrace cannabis commerce?
Well, Kirsten, that's a good question, and I'd love to hear everybody else's opinion on this panel. Mine is, in a word, no. If you were to look at Visa's current policy, it's that they prohibit any transaction on their networks that would violate the federal laws of the United States. The Safe Banking Act, if it were to pass, does legalize the banking of the proceeds of the cannabis industry under certain very specific circumstances, but it doesn't change the underlying problem, which is that cannabis is a federally illegal substance and the trade of it is also an unlawful activity. So the Safe Banking Act in and of itself, without a policy change from Visa and or the other major credit card brands, I don't believe would be enough to see conventional credit card processing take root in cannabis. But I'd love to hear what Ashley and Tyler have to say about that as well.
I'll just say all of the card networks in the United States that I've talked with their policy people on have indicated that they're going to wait for some version of federal legalization, and however that comes, whether it's from the Supreme Court, whether it's from legislation, whether it's from just carving cannabis out, excuse me, of the Controlled Substances Act. I take them at their word on that. And I can tell you the reasons that they won't look at that is because it continues to be a huge problem. And they have a very complicated payment structure. The velocity of transactions that go across their system create for their own levels of risk that are dangerous for them, that they're just not going to take on a legal risk like that.
Tyler?
Yeah, I couldn't agree more. It's refreshing to hear people say that because it's interesting. You see the industry react to things like the SAFE Act, and I even saw a very large operator in a state on the West Coast send out a notice to all of their member base saying, "Hey, contact your senator, tell them we need the SAFE Act so we can offer credit card processing."
No.
And I have something for everybody. In offering our payment service, Visa adheres to the rule of law and seeks to prevent our network from being used for unlawful purposes. Although the federal government previously announced it will not challenge state laws that legalize and regulate marijuana sales, marijuana nevertheless has remained illegal under federal law. Such transactions are not permitted on the Visa network until such time as federal law allows otherwise. Federal legality is the only thing that brings them in. And I don't know how else to convey that to the industry. I see even payment companies that are sophisticated, you know, I guess hedging their business model on the SAFE Act, bringing them in. It's not the case. And so I think it's important that everybody keeps that in mind and understands what it's going to take to bring them in.
So I'm going to tap each of you because Emerging Markets Coalition gets tapped quite often for lobbying input and advice around payments, banking, that kind of thing. And to the point that you all are making, these calls will come in from very sophisticated folks spending a whole lot of money lobbying, saying exactly what you just said is, hey, let's get safe through, and the doors will open up for traditional card payments. And you feel like the freak in the room to say, no, that's not how it works. So you all can join me. We can all be freaks in the room as we clarify that.
I'm frequently the freak in the room.
Why we went to law school, right?
Yeah.
So we talked about safe banking. Do any of you want to weigh in on MORE Act, if that has any impact on payments?
I think it's, oh, you go ahead, Ashley.
Oh, sorry. I was just going to say it's unclear. With federal legalization, we should see a lot of things open up, but the regulations on the financial industry don't go away. So the requirements, for example, to report every single transaction that comes through the cannabis industry to FinCEN, for example, from a banking and a payments perspective remains. And that continues to be a huge cost to financial institutions interested in working in the space. So while the industry may be working towards federal legalization, and I hope that it continues to, and I really would love to see it federally legalized. There are things that will open up, there are things that will continue to grow, but again, when you start talking about tackling banking and payments, the really kind of critically important thing to this is also like operationally, how efficient can you be as a financial institution while supporting this industry? And a lot of that has to do with the very expensive cost of compliance, the expertise that's required to actually do compliance, not just for cannabis, but for finance in general. It's very complicated. There are a lot of regulations to deal with, not just the cannabis ones. So with federal legalization, I think that you will see a lot of, on the financial side, this will be very interesting to watch, because I think you'll see a lot of people rushing in and then having to back their program back out because the regulator says, oh, no, you don't have the right processes and controls in place to actually be able to support this industry legitimately. Because right now it is still heavily cash. And that is one of those things where you have to verify the source of the transactions. Digital payments makes that much easier. It certainly does, but as long as you're operating in a way where you in fact are identified. But one of the things that's challenging about that is you still have this very high cost of compliance that is unlikely to be backed back off right away. So you've got probably a couple of years of negotiations on the policy perspective, then new regulations that will come out, and then a couple of years for those regulations to actually be fully instated. I mean, that's how financial regulations tend to work. And that's after the actual legislation goes through. So it still takes time.
Well, I'm glad you brought that up, because you hear so often, oh, the bill's going to pass and we're ready. Like, oh no, there's rulemaking, there's all kinds of things that go with that.
Yeah.
Dan or Tyler, do you want to weigh in on more or go into tax reform?
Yeah, let me jump in on more real quick. I agree with Ashley that it depends, and one thing that is certain is that it'll take a long time for the dust to settle. It is possible that if we get something like the MORE Act, which as of today would perhaps appear more likely even than the Safe Banking Act to be the first piece of reform that passes. But if we get that, or if we get a president who perhaps deschedules cannabis via executive order, either before the election or after inauguration, that is possibly the thing that clears the specific hurdle that Tyler and I both referenced earlier with respect to Visa's policy and the other card brands, their policies that echo that. But there will still be quite a bit of confusion, as Tyler said earlier as well. And I think this was significant. The most important relationship here, the one that matters the most, is that between the institution and its regulator. So if we get the MORE Act only and we don't get the Safe Banking Act, which takes the existing regulatory guidance, codifies it, making it permanent, and directs the FFIEC to promulgate guidance for its examiners that set out this uniform procedure, that's the kind of thing that's going to be required to give the stability needed for larger institutions to be able to serve the space. And so if you get the MORE Act without that stable base, it's going to be murky for quite a while longer, I would think.
Yeah, I'll just throw something in there too. And Ashley made the point earlier, regulatory bodies are not going to suddenly drop overnight their expectations of institutions serving this market. This is always also going to be cash intensive, even if the branded card networks come. And the reason being is because there's still a bit of a stigma. Many people don't want record that they were there. They want to pay cash. They want to walk out the door. That's a part of this industry, and it's going to be for the foreseeable future. Now that will quell over time. But that being said, it's costly for an institution to serve this market. So you may see some institutions run in thinking they're going to have this big profit center, but as others enter the market and the market gets more competitive from a cost perspective, that's going to drive institutions out because the cost of compliance and the revenues aren't making sense financially. So that's the other part of this that I think is going to come into play. So I think at the end of the day, you're still going to have a very limited number of institutions willing to serve this long term. And if you look at other highly regulated industries, that's very much the case today.
Absolutely. So guys, our last topic is one that comes up all the time, usually at cocktails, not on the stage. But how can payments be used as a tool to help fuel tax discussions, potential tax reform? And I'll share just a snippet story of a past life in a very highly regulated industry that had to do with payments. And we went as an industry and we brought our lawyers with us, our business people, compliance, marketing, product, went in as an industry to IRS Crimes Investigation Unit and said, we will show you whatever you want. We have nothing to hide. We are entirely transparent. And working with them on, as an industry, to show the power, the accuracy, the auditability of an electronic payment, and to show them as an electronic payment, it's a tool to help you, IRS, affect what you're trying to do if we can get some fair taxation. At the time, the way that industry was structured, it was really expensive. And so I guess a question for all of you, since you've been in this neck deep for a long time, is what would you think would be the interest or the capability of doing something like that with cannabis, where we go straight into IRS and have a very adult discussion? And I'll share with you, they really wanted to learn from the industry and we wanted to learn from them. And it sounds corny, but I've still got friends over there, right? That you wouldn't think, because they don't always have the reputation of being friendly folks, but they were, and they were very interested. And we got the changes that we were seeking. So anybody want to weigh in?
I'll take the first stab at that. We are all operating in an industry that we are all very much engaged in taking from operating in the shadows to operating in the light. And part of that transparency is required and necessitated by the enhanced due diligence that's required in order to obtain and maintain a banking relationship. But on the payment side, well, we talked a while today about the challenges of getting a compliant payment method and some of the risks of using a non-compliant one. There are also absolutely some very strong, compelling reasons why businesses would want to push on that frontier in order to get a payment method that is both compliant and resonates with their customers. And largely this is because of the safety risks of having that much cash on site. There's also the economic benefit of taking electronic payments. There are studies that show they increase the average ticket price by 10 or 20% there in some cases. But the one you pointed out, transparency in the eye of the regulators, most pertinently in this discussion being the IRS, I would think would be very much a benefit in order to be able to go in there and try to effectuate some relief on 280E, because we know that, of course, is a very, very significant hurdle in the industry. So without having any direct knowledge there, I would have to assume that that kind of transaction level individual transparency that would be made available would certainly be a benefit.
I'm gonna jump in here. So 280E, it was designed to basically make it so that criminal enterprises could not take tax deductions, right, on their corporate tax. So if you set up, this doesn't make any sense to me, because like if you're a criminal organization, are you looking for tax benefits on your corporation? That depends on whether you're money laundering, right? Have you set up shell cores? Have you done? It gets to be really complicated, but they're going after very complex organizations in that way, and it's not fair. But really, only federal legalization takes you out of the 280E bracket, right? At least from a legal perspective, unless, of course, the IRS is willing to adjust the regulations under 280E and exempt cannabis, like legal operators from that in cannabis, right? And so maybe that is a discussion that we should be having. Certainly, the transparency that you get with digital payments can assist in that, because I think what they're concerned about really maybe is the commingling of good and bad assets that may come from legacy black market activities. Maybe they're the ones providing the really outstanding products because they've got generations worth of expertise on the plant, but perhaps in the past they have been active in the black market, which they want to watch out for too. So if you can prove that you're operating completely legally in the state legal cannabis space, I think that it could be good for talking with the IRS regarding 280E and trying to really press for better treatment under the tax code. But when it comes down to it, if more were to pass, then 280E arguably should go away.
Tyler?
Yeah, I mean, look, anytime you can add transparency, it's going to be better off for everybody. It's better for the financial institutions. It's better for the regulatory bodies. Obviously, better for the IRS because they get their tax monies. And I think more than any other issue compelling us or moving us towards federal legalization, it's revenue potential, right? It's revenue potential from the investor standpoint, from an operator standpoint, and from a taxation standpoint for these states. I mean, I can't tell you how many times I see a state come out with a restrictive medical program. They start getting those tax revenues in, a year and a half in, they approve chronic pain. Overnight, the demographic is the 19 to 30-year-old male with turf toe, right? And the revenues go through the roof and they get massive tax revenues as a result. So I think anything that can help add that transparency, give that chain of custody, and take us out of the dark doldrums of a black market is going to be beneficial for everybody, and will compel the IRSs of the world to want to cooperate to get there.
Absolutely. And that was one of the things that resonated. You have all talked about transparency, and the saying goes, drug dealers don't take Visa. So some of the discussion around this has been that maybe it'll help to reduce some gray market transactions as people get more accustomed to regular payments. So our experts, thank you very much for all of your time here. Hopefully next year we're all in person. I'm going to hit a couple highlights. Reminder to anyone, if you want to have a deeper conversation on any of this, please reach out to any of us. So we started this asking, why is it hard to bank cannabis in the US? And Ashley, you talked about federal and state laws are different. You can bank legally at the state level. We had all talked a little bit about how it gets challenging when you're using the federal payments rails. Tyler, you said the only conversation that really matters is between the banker and their own regulators, and that has evolved over time where we're really working together to better understand and have tools and templates. Also shared that the FinCEN report that came out makes it look like there's 700 banks, but we know from being in the business, that's how many filed SARs, that's not how many are actively serving. So maybe it's 100 or so. One of the good takeaways was, Tyler, you shared that no financial institution has been shut down by examiners in 7 years. So all the bankers listening to this take heed of that. We talked about the risk of a cannabis retailer offering non-compliant payments. And Ashley, you brought it home with a non-compliant payment. Something that isn't transparent is defrauding a financial institution, a bank or a card company, and it can be categorized as money laundering, which is taken very seriously.
Both are crimes. Yes.
Cashless and ATMs fall directly into that category. I can't tell you how many times I talk to a merchant, they say, oh, cashless and reverse ATMs are permissible. Not the case. And unfortunately, some people are going to learn in a really bad way soon.
It's definitely something to pay attention to. You could also make the argument that if cashless ATMs are fraudulent, then perhaps every ATM that's physically located in a dispensary is as well. And we've seen different institutions have different tolerances for physical ATMs on premises also. It's definitely going to be an interesting area to pay attention to.
And that's why this thing could go all day if we wanted to go talk about some of the subtopics. All of you agreed with vehement head nods that bank directly with the financial institution, with the bank, so you know who they are versus going through third parties where the bank itself, you might not know.
You always should know who's custodying your funds.
And then on SAFE Act, the question was, if that passes, does that solve everything for the payments issues? And Dan, you kicked us off with saying it doesn't fix the underlying problems because cannabis is still federally an illegal substance, and these are federal payment networks. Dan, you also shared that the executive order, if the administration passes an executive order to deschedule, that also doesn't solve right away what would need to be done in payments. And Tyler, you had talked about, even if it's federally legal, it's still going to be high risk and high cash. And therefore, there's probably still going to be a limited number of financial institutions to enter. Look at alcohol and gaming. There's not a lot of financial institutions that serve the market, but those who do well. And then we finished with tax reform, which again could be a whole day topic. And as we look at tax reform and what could come of it, and that so much of what's spurring the discussion is the revenue potential, especially at the state level. And that as states properly legalize with the right rules and tools in place, that there can be some good tax revenues that support some really good things. We talked about potentially doing with this industry, what we've done with past highly regulated industries is to go straight to the IRS Crimes Investigation Unit and be transparent. This is how it works. What would you like to see? So that we show that transparency, and maybe that helps to drive some of the 280E reform. So guys, hot topics, and thank you so much. Have a great day.
Thank you.
Thank you.
Thank you. Good to be here.